You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's
Really?
gone up.
Hey Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. Here again with my co-founder Chase, and very excited to record with two people I consider friends. They are Jackson Mikalic and Cam Stromme from Onramp. They are very humble, so they probably won't say this themselves, but they're experts in the Bitcoin industry. They have onboarded billions to multi-sig custody, so really excited to have them talk more about Onramp and why Acropolis uses Onramp as the sole custodian of funds. So welcome.
Thanks, Mason and Chase. Really happy to be here.
Thanks, gentlemen. Appreciate the opportunity. Good to see you both.
Yeah, let's get started with just a brief intro on both of you. Just so the audience is familiar, we can go ahead and start with Cam.
Sure, thanks. So I've been working in Bitcoin for 4 years now, which, Bitcoin has that way of warping time. So it seems like a decade in the best possible way when I think back to when I started working at Unchained Capital in 2021 and then all the way up to present day. So I've been focusing on primarily helping individuals think through Bitcoin custody. So my focus has been Bitcoin only, primarily Bitcoin custody, and then financial services, estate and inheritance planning, and really helping individuals, businesses, family offices, firms of all sizes to think through, once they've come to the conclusion that Bitcoin is an asset that they want to establish a material position in, and they have a long-term strategy around it, then they're coming typically to me to think about all the nuances to custody and really what makes most sense for their situation. So I get to talk with individuals and organizations on a daily basis and help provide a framework and a strategy for them to think through that long-term horizon.
Yeah, and so my background is in traditional finance. I've been working in alternative investments for about 7 or 8 years now, and first purchased Bitcoin back in 2017, but it was a very indiscriminate amount, and I didn't know anything about what I owned. And then in 2018 and 2019, I started to do a little bit more research. But in 2020, it really clicked for me, as I think it did for many people. And for me personally, I was working at the time in manager research. So my team would evaluate hedge fund managers and then private assets, like private equity, real estate, private credit, etc. And in 2020, we all know what happened there with the fiscal and monetary authorities and a deluge of liquidity that enters financial markets and economies. And it started to become very clear because the managers I was working with, they had very intricate strategies and they were working on specific asset classes. But anyone who was long the markets was making a lot of money in 2020. And that was because the denominator was decreasing in value, right? The USD was depreciating. There was more units entering the system. So anything denominated in USD or other fiat currencies was increasing very rapidly. And so that started to click for me. I started to allocate to Bitcoin more meaningfully in 2020 and since then. And then as one does, I became very passionate about Bitcoin, not only as an investment, but beyond that as well. And I wanted to start looking for opportunities in the industry. And I was very fortunate to find my way to Onramp in late spring of 2023, and have been with the company ever since. So about 18 months working alongside fantastic people like Cam and building Bitcoin financial services and asset management capabilities.
Love it. Well, I think the first question is going to be a loaded one, but let's explain what Onramp is and why it's different from other forms of Bitcoin custody.
Onramp is the first instantiation of multi-institution custody, which is kind of a mouthful. And when we show the diagram of what it is, sometimes it kind of warps people's brains and they're trying to figure out what is this unusual construction of 3 separate institutions and what does that mean for our clients. So in the context of Bitcoin custody, it's helpful to understand, what have been the options previously. they were binary. So, and this is true of any investor type, from the individual up to pensions, that if anyone wanted to allocate to Bitcoin, in terms of the custody, they either had to trust a single institution to custody that Bitcoin for them, or they had to custody themselves, whether they held all or most of the private keys themselves, which controlled their Bitcoin. There are major trade-offs to both. So Onramp was birthed out of understanding and viscerally feeling the pitfalls of both solutions that our clients had experienced through the number of years, and think, okay, there has to be a better way. Bitcoin needs a custody solution that allows it to scale more effectively. So we're providing the best of both worlds, a solution that is highly secure, and it's also very easy for the end user, the end client, to use. The client is not needing to manage any cryptographic material themselves. They're not needing to be highly technical, and also to maintain a solution indefinitely. But they also don't have to place trust in a single institution. The trust and the responsibility of the Bitcoin custody is spread across 3 separate institutions, and any 2 of the 3 institutions are required to move Bitcoin out of a client's vault. And the client uniquely is the only one who can authenticate and request the institutions to sign, which are effectively the client's keys. They're legally and operationally, the institutions have no ability to move Bitcoin without the client's discretion. So it provides a whole Onramp's multi-institution custody. It provides a new type and a new level of security that we have not seen previously in Bitcoin. So for a number of many reasons, very excited about it, as you can tell, and firmly believe that this model of custody is how most Bitcoin ends up being secured. There will be different permutations of multi-institution custody. There will be other companies that imitate and copy this model, but that, for the reasons we can discuss and go into, because of its ability to drastically reduce the pitfalls and the trade-offs of their custody solutions, that more and more people over time will opt into multi-institution custody.
Yeah, so I often, when I explain multi-institutional custody to the folks that we talk to at Acropolis, I basically say it maintains the decentralized ethos of Bitcoin cold storage multi-sig, but without the technical burden of key management and all the risks and kind of single counterparty risks that you hold on yourself for doing so. But Jackson, this one's for you. So we often hear in the Bitcoin space this idea of not your keys, not your coins. So maybe you can speak to this idea that I've heard the Onramp folks speak about, which is maybe reframing this to not your control over the keys, not your coins.
Yeah, I appreciate that, Chase. And not your keys, not your coins is a great mantra to live by. Historically in Bitcoin, it's kept people safe from a lot of incredulous operators in the space and, outright frauds, Ponzi schemes, and just poor risk management in businesses. So it's been a great way to manage the asset, but there's also a recognition that Cam spoke to that it may not be the best way to secure 6-figure Bitcoin, right? And so if we're individuals or at Acropolis working with businesses and figuring out how to secure this asset, managing devices and backing up seed phrases at some point becomes extremely burdensome and I view it as increasing in risk over time. So the key ethos of not your keys, not your coins, what it is driving toward is not your control, right? Because historically, if you didn't physically hold keys in your hand, it meant that you were giving up total control of the asset to a third party that managed all the keys, that could rehypothecate the asset, that could be compromised and lose it, etc. What we've done that's different at Onramp is that the clients still remain in control. Cam alluded to it in his last comment, but the only way the Bitcoin gets moved out of the client's vault is by the explicit end direction of the client, right? So these keys that are being managed by institutions, these institutions legally have an obligation to the end client to sign at their end direction. And again, the only way that happens is by their explicit direction, whether over video calls or in-person meetings. And so us as a business, our partners with BitGo Trust and CoinCover, Tetra Trust, that is a process that they have to follow legally where the client remains in control. Anyone, either them or anyone authorized on their account, is the only person that's able to authenticate and verify for signatures to happen. So it's the first third-party solution where you don't physically need to hold keys in your hand and have seed phrases backed up for you to control the asset.
Would love to talk about how Onramp was actually created. Like, how was the idea come about, and how has it evolved over time?
This was Michael's idea, Michael Tanguma. So he and I worked at Unchained together for about 3 years, and it was really, credit to him to think differently about the two binary options we had in Bitcoin, either trusting a single institution or self-custody. We could see that left a lot of people between a rock and a hard place, and truly left a lot of people out of the market who just didn't allocate to Bitcoin at all. Because presented with those two options, they couldn't get comfortable with sending a wire to Coinbase, much less FTX or any other type of firm. But then also, would be shipped these devices or see this kind of solution and say that, I'm just not technical enough, or even if I use this, I can't allocate the percentage that I'm thinking of in my mind. I may want to buy $1 million worth of Bitcoin, but if you're telling me this is the best option, self-custody, I'm going to feel uncomfortable doing that, and maybe I can only allocate $100,000 or less. So, I think without speaking for Michael too much, more speaking for myself, it was a process of really listening closely to what our clients were telling us, what worked well about self-custody, protecting them from single institutions, helping them to have complete control, but then also what their concerns were. So the three most common concerns that everyone has are solving for inheritance, feeling that risk, number two, of user error, of them making a mistake at some point, and then three, of the physical threat, that feeling of having increasingly a larger target on your back as Bitcoin becomes more valuable. Most people secure some or part, or sometimes all or most of their Bitcoin key material in their home, which is not recommended. But you can understand how that happens, because most people don't have multiple homes where they can put, multiple pieces of Bitcoin private keys. So there are just certain pitfalls or certain challenges with self-custody that, we struggle to solve for our clients then. And, Michael was able to think about a different way to use multi-sig, which is emerged as an absolute best practice in Bitcoin. So to surface multi-sig in a different way that made it easy for the client, and also provided a 10x plus in security. And so multi-sig, just real briefly, is simply stands for multiple signatures. It provides redundancy in Bitcoin security. So this is part of Bitcoin's open source protocol. It was added virtually at its infancy by actually the founder of BitGo, one of our key partners. So it simply means that it provides Bitcoin users the ability to custody Bitcoin using multiple keys, so that even if one is lost, you have other keys you can rely on. Multiple signatures are required, and you can create your own schemes. A 2 of 3 multi-sig has emerged largely as the standard in Bitcoin, where 2 signatures out of 3 are required. And then so Michael was able to think about, okay, instead of requiring the client to hold 2 out of the 3 keys, they're taking on most of the risk, the responsibility, etc. What if we surface a 2 of 3 multi-sig where you had 3 professional institutions whose sole focus and core competency is around 24/7 thinking through Bitcoin security best practices and managing that, which then frees up our client to continue with their daily life, to focus on their job, their family, their hobbies, because that's that's just kind of the part of the practical reality of it too. Is no matter how much people may want a world where everyone has their own keys and is completely sovereign and being their own bank, there's a tremendous responsibility that comes with that. And most people their desire or goal is not necessarily to become masters at these tools. They want allocation to Bitcoin. They want exposure to the best asset class that we've ever seen. And it becomes hard to carve out time to continue to dedicate to, okay, here are the latest firmware updates. I'm going to read through these, make sure these are solid. I'm checking my key. I'm doing all those things. It's a large investment of time and then intellectual, ability.
Yeah, I think we all appreciate the digital bearer aspect of Bitcoin. And as you mentioned, Cam, with your background at Unchained, this idea of holding Bitcoin, spot Bitcoin in cold storage, multi-signature vaults, that is very appealing for the individual. And maybe it gets less appealing when Bitcoin, you're onboarding those clients at 10K Bitcoin, and now we're looking at 100K Bitcoin, and people maybe start to get a little bit nervous about how many of their friends and family members and neighbors they told about, buying Bitcoin. And all of a sudden you start to feel more and more like a target of a $5 wrench attack. But what I'm really interested in, and maybe Jackson, you can take this because I know you're going to have to jump sooner than Cam here. I'm really interested in how multi-institutional custody actually unlocks corporate adoption of spot Bitcoin, because as we know, corporations have these compliance controls, governance protocols. The investors that help fund a business don't want the CEO to be holding the entire company's reserves on a plastic key in their home office and potentially running off with the funds or mismanaging those keys. And so there's just a certain level of compliance and governance that is expected out of any proper corporate entity. And so what is it about this type of custody model that finally unlocks the ability for corporations to own and hold spot Bitcoin on their balance sheets?
Yeah, thanks, Chase. That's a great question. And you hit the nail on the head for a key component of it, because investors, whether you're a corporate balance sheet or you're an individual high net worth or you're an individual that owns $1,000 of Bitcoin, have been kind of pigeonholed into the same solutions. And it ties into the founding of Onramp, right, and just certain parts of the market being underserved, namely people who have material exposures, but then also institutions of varying flavors, right? So corporate balance sheets, institutional investors, financial advisors. And when you look at the landscape, and the two options are either you leave the Bitcoin on an exchange and you constantly are reading headlines about exchange failures and compromises, hacks, etc., or you have to manage these devices, it becomes a very daunting and infeasible, untenable proposition for many. So there's also a recognition, Chase, as well, that corporates that have adopted Bitcoin have chosen to diversify custody. So in many cases, if they're not managing the keys themselves, which practically speaking has only scaled to kind of like sole proprietorships or maybe smaller family run businesses in most cases, if you're a larger corporate balance sheet, they're already diversifying custodians in the sense that they don't want to have a single point of failure. They don't want to have all their Bitcoin with one exchange, right? So they start to vet out multiple exchanges or custodians to park X%, Y%, Z% into different institutions, because they don't want to run the risk of them being right about Bitcoin, but being wrong about their key partner, right? And how the assets are secure. So the big unlock with multi-institution custody is that it's a great play for diversification, and it unlocks corporate balance sheets in the sense that you don't need to be kind of spreading your eggs in many different baskets and hoping that one of those baskets is not compromised. You're able to use a redundant solution, and a solution that does not offer any single point of failure, right? So when I think about corporate balance sheets, they're already acknowledging that there's a risk in terms of how they're managing the asset. And then there's also the challenge, to your point as well, about continuity of businesses, right? And so if a business is going to be managing their Bitcoin and they have opted for self-custody, well, now they need to think about who's managing the keys. If there's turnover, how are those keys managed, right? How do we know someone's not running off with the keys? And naturally what this would evolve to is you would need to have essentially key management departments. Companies would need to start building out professional teams to be managing this stuff in-house, and still you would face the same risks of managing the devices. So there's a lot of reasons why companies would want to outsource this, and which they have done, but now there's a solution again where they can use a multi-institution model where there's a two of three independent businesses securing the asset, and they don't have a single point of failure. So there's a really critical unlock, and I do feel very confident that multi-institution will become the standard for corporate balance sheets.
Jackson, you talked about the diversification of risk, and I think anyone who's ever invested, received any investing advice, they always talk about diversification of assets. But in Bitcoin, we like to focus, or especially around our companies, we like to focus on the diversification of risk. So if you could talk about why we focus solely on Bitcoin and not diversifying into a broad portfolio of other crypto tokens, and what sort of benefits that brings about.
People like to talk about the digital asset market, right? And Bitcoin really is the market. If you look at Bitcoin's market cap compared to the broader digital asset space, Bitcoin's dominance is anywhere from 50 to 60%. this year. And so you've never seen another asset class where one asset is majority of the market. So that should be a signal in and of itself that Bitcoin is really the asset worth paying attention to. And then there's, of course, a lot of other differences with Bitcoin versus crypto. The way I think about crypto is that it's essentially liquid venture, right? So there's teams that create a token, and the token is meant to have some utility. And the idea is that these ecosystems will grow over time, but they have foundations and they have executive boards, right? Bitcoin is just a commodity. It's the first time we've seen a digital commodity, digital scarcity. And it's a totally different beast. It's something that is not controlled by an individual. It's not controlled by a government. It's not controlled by corporations. It exists as a technology peer-to-peer. And its primary use case for corporates at the moment is preservation and growth of capital, right? Because what executives or CFOs at corporations are looking to achieve is they want to be able to have a treasury and not see that treasury be diluted over time. And so crypto doesn't play a role in that at all, because crypto is speculating on potentially what could happen with a token in the coming year, months, or even weeks, right? Whereas Bitcoin is a digital form of capital, and it is a commodity that can be used to preserve that capital over the next 4, 10 years, or even generations. So hopefully that gives you a little bit of a sense, but there's certainly a lot to unpack that could be a conversation in and of itself on the differences between the two.
Yeah, and Cam, maybe you can speak to this one, but Onramp obviously is offering this multi-institution custody platform, which theoretically could serve, somebody with just $2,000 worth of Bitcoin as an individual. But I believe that you all are, if we're speaking honestly here, are targeting a little bit upper market. So maybe you can speak to the actual clients that you're aiming to serve, such as perhaps RIAs, wealth management funds, sovereign wealth funds, high net worth individuals, maybe even central banks. Just kind of speak to who your ideal customer is for this particular business.
Most of our client base today is comprised of individuals who have, I'd say, between 25 to 75% of their net worth in Bitcoin. So they've been in Bitcoin for a number of years, and that allocation has steadily grown along with as Bitcoin's price has appreciated and their conviction in the asset class has grown. So they're highly sophisticated. They've typically used more than one type of self-custody solution. And then for one of the reasons I mentioned earlier, inheritance, risk of user error, you wanting to be able to travel with their Bitcoin, fear of physical attacks, for one or a combination of those reasons, they're using Onramp and our multi-institution custody for either a portion or majority of their Bitcoin. So it's important to acknowledge too, for many of those individuals, they're still using self-custody for a portion of their Bitcoin, I think more often a minority. So we're not dogmatic in that way either. There's a place always for self-custody, incredibly important. It's always a check on institutions. But that's been a very effective approach, this barbell approach for the sophisticated Bitcoin investors that are coming to us, is to use a combination of both multi-institution custody and some in self-custody. So that's most of the client base today. We certainly have family offices, small, medium-sized businesses. We have the first pensions in the United Kingdom, which are using our platform. Businesses like this grow organically around an individual client base, and then as many of those individuals are oftentimes business owners, so then they're helping their fellow principals in that business to understand both the investment case for Bitcoin, and then the layer below that, the best custody, which is multi-institution. So that it's an organic process that plays out and then expands the scope of the type of clients we serve. And then, of course, now that we've broken through $100,000 Bitcoin and there's more awareness back generally, we are starting to see the newer investor kind of come back to the table for Bitcoin, the less sophisticated in Bitcoin terms, but typically a high net worth individual looking to buy between $100,000 to millions of dollars worth of Bitcoin, and our platform is very well suited for them too, because now they get the protections of multi-sig, of not having a single point of failure without being a custody expert, or without having the benefit of 5 or 10 years of having used various custody solutions. They can step right in, allocate, send a wire, and then have a segregated account set up just for them with all the best practices that we've learned, kind of as a trial by fire through the years, and now I get to surface and bring to the client. So that's one of the aspects that makes us so bullish on this business is that despite the name being called Onramp, we have some of the most seasoned clients in Bitcoin as our who have chosen to partner with us, and then our platform really scales from all levels of competency, and then from individuals up to the most conservative institutions.
Yeah, and Jackson, while we still have you here, maybe one more question for you before you have to jump. We're seeing bills being proposed and a lot of talk in Congress about allowing typical qualified custodians and institutions to start custodying spot Bitcoin. There's been a hang-up that has kind of kept the traditional banking system out of being able to custody this asset on behalf of their customers. And so is that a threat to Onramp's business if these institutional kind of recognized players are able to start custodying Bitcoin? And if that's not really a risk, why not?
I don't see it as a threat because what we've done here with multi-institution is interoperable, right? So what we're always doing is vetting new potential partners to participate in key quorums. So as this model will evolve, and what will take time to, Chase, is that these banks and traditional financial institutions, most of them are starting from ground zero. I think some of them were building out digital asset and Bitcoin working groups in 2020, 2021. And then with FTX happening in 2022, a lot of them have taken a step back. So most of the businesses that would be entering the space in 2025 are starting from the early innings, right? So A, it's going to take time to build out the competency and the know-how to be managing cryptographic material. And then B, I see it as an opportunity for our business to continue to add new key partners to the quorum for Onramp clients, whether it's private clients or businesses or institutional investors. And so that's the beauty of this. It's also a key distinction to what we do at Onramp and why we focus on Bitcoin only. Again, there's many reasons why, but multi-sig is native to Bitcoin, right? So this idea that you could have a multi-institution model where independent businesses participate and collaborate to manage Bitcoin on behalf of investors is only possible with Bitcoin. So I think it's exciting, Chase. It will take time to play out. And if anything, it's almost a complete reversal of what we've seen the past several years of just how much reputational damage Bitcoin and the Bitcoin industry has taken from just poor risk management, Ponzi's, frauds, etc. So to have the largest financial institutions step into the ring and start to offer Bitcoin financial services will be incredibly beneficial to Onramp and other Bitcoin native companies that exist. And I view it as an opportunity for us to partner.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin Treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, and a creative financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days. Well, I know you got to drop, Jackson, so next one is for Cam. We touched on it a little bit earlier, the idea of Bitcoin and treasure maps and passing that on to your family. I think once your Bitcoin position becomes meaningful, like you said, 100,000, maybe we get to 500,000 in terms of the price of Bitcoin, you start to really worry about passing this value that you worked hard for to your family. So if you could talk about how Onramp facilitates this and why it's different from the, like I said, Bitcoin treasure map.
So the way we facilitate this is a major unlock for any Bitcoin investor because they can tell their beneficiary, call Onramp and they'll help you gain access to that Bitcoin. And it's really as simple as that. And from there, it's a process of due diligence, of paperwork, of onboarding that beneficiary and vetting them. It's reviewing a death certificate. It's maybe reviewing a will or a trust. But these are normal processes within an inheritance process. This is not requiring the beneficiary to be proficient and understand where the cryptographic material is stored and secured, being able to gain access to it, understanding how to use those tools safely and securely. And that is one half of the Bitcoin inheritance aspect, which is the key management, making sure that the beneficiary is able to get a hold of enough cryptographic material to gain access to this bearer asset. The second part is then legal title. Are they actually legally entitled to that, be able to use and hold that asset? And that we also take care of. So clients on board with us, very easy, within 30 minutes, right through our application. At the end, they can take an additional 5 minutes, list their primary beneficiary, their contingent beneficiaries. They can list the allocations, the percentages of Bitcoin that should go to each. And then they sign a designation of beneficiaries in transfer on death agreement. So that establishes legal title. It actually makes the Bitcoin in their account a non-probate asset. So it ensures that upon their death, the transfer of their Bitcoin to their beneficiaries will remain private. It won't enter the public record on their state or local county records. It'll be a faster and smoother process where if you talk to enough folks, you hear horror stories of probate taking months, taking years. I mean, that's not obviously specific to Bitcoin of all assets that are being transferred. So it's certainly a cautionary tale when you hear those, to make sure that you're setting yourself, your beneficiaries up to avoid that probate process. So we've really been able to unlock something here with multi-institution custody where clients can very quickly, at no additional cost, have assurance around the key management aspect and the legal title.
And maybe turning to, this question is just more Bitcoin broadly as opposed to multi-institution custody and what Onramp's doing, but we often talk about Bitcoin as the hurdle rate in the cost of capital in today's financial markets, basically the opportunity cost of where you could put that incremental dollar to use. And so I'm curious, kind of playing with this idea of a hurdle rate, what is the hurdle that is, you believe, standing in the way on the educational side between institutions and individuals learning, understanding, and beginning to really adopt Bitcoin, the asset class? What's the educational hurdle rate?
Right now, I think there is, to Jackson's point as well, there's still an overhang in the market from FTX in 2022. That did the natural, the natural inclination for someone, which is counterintuitive to, disassociate Bitcoin from all the rest of crypto. Most people lump it in digital assets, and Bitcoin is one of many digital assets. So then, and then also the inability to kind of separate an exchange or a firm that's providing services versus versus Bitcoin itself. So there's still a lot of reputational damage that was done in that last cycle just 2 years ago, which is then astounding to think that Bitcoin is already being considered as a strategic reserve asset for the United States, for Texas, Pennsylvania, Ohio, Florida, for other countries around the world. So at some of the highest levels, that reputation didn't take as large of a hit. But for corporates, for high net worth individuals, I still see them in their minds, like they're trying to wrap their heads around this catastrophe that happened a few years ago where the market tanked once again, and them trying to take the asset more seriously versus, I think the more common opinion is that it was a trade that they missed, and they're happy for some of the early Bitcoin investors and happy for us that we've done well and now Bitcoin's at $100,000. But okay, too bad. I didn't hit Nvidia either, or I didn't buy Amazon in 20 years ago, and it's okay. I'll find the next trade. So it'll just take, for whatever it is for that individual or corporation, something about Bitcoin will spark their interest. For most people, it does take a certain price level that it finally grabs their attention. But whatever it is, at some point we know that they will be intrigued to learn more about it. And that's really what it is. It's investing something intriguing you enough to invest the time to learn and take the 10 or 100 hours to at least take Bitcoin more seriously and for yourself try to steel man some of the common critiques that you've heard through the years.
Yeah, it's one of the underlying themes in Bitcoin, in that the saying is you can lead a horse to water, but you can't force them to drink. In that, whether you're an individual or you're a business, you have to have some sort of reason to want Bitcoin. And from an Acropolis and business perspective, it's that your margins are compressing, everything is becoming more expensive. You have to find some sort of way to protect your business so that it can last for generations, so that you can pass your Bitcoin on to your heirs and your business on to your heirs. So fully agree there. I think we're getting close to the end of the episode, so would love to know what are some future developments or features we can look forward to from Onramp. Where does Onramp see itself in 5 years?
The largest Bitcoin custodian on the planet. So more specifically in the short and medium term, continuing to build out the financial services around multi-institution custody, because we know that's incredibly valuable for people, whether they want to sell some Bitcoin this cycle or we have tax advantage accounts in IRAs now, whether it's building out functionality on the corporate treasury side for Acropolis's companies that you're working with. You can also get a glimpse into the future too, what Jackson referenced with us adding Tetra Trust as another key holding institution. So expanding the options of key holding partners for our clients. So Tetra, for instance, they're another qualified custodian. They're in a different country. They're based in Canada. So clients, our private clients in Q1 will be able to opt into a different quorum where we are subbing out our Onramp key, and we're still helping to coordinate and provide a dashboard and affirm and relationship management. But the 3 keys in that quorum will be Tetra Trust in Canada, qualified custodian, BitGo Trust in the US, qualified custodian, and then CoinCover based in the United Kingdom. So now you have keys in 3 separate countries, and you can start to see how that model can expand over time to financial institutions being involved, to institutions in the Eastern Hemisphere participating in this quorum, and then based on what we think are best practices for our clients, and then also what our clients are requesting, we can continue to work to vet and due diligence on other firms that could meet the standards we require to participate in this quorum. You can see too a future where if you have extremely large organizations and firms that have tens, hundreds of thousands of Bitcoin, you might want a 3 of 4 or a 3 of 5, which is a lot harder to operationalize and therefore a lot more expensive. But so for the largest clients, they'll be able to pay for those services. So there'll be all sorts of permutations, but I think that'll be some of the most exciting developments, is seeing in the next 6 to 12 months which other types of institutions not only understand Bitcoin, but understand multi-institution custody and want to participate.
I think it's really interesting that you kind of just raised the idea of this multi-jurisdictional key holders, not just for the Onramp clients and obviously the Acropolis clients that we onboard as well. But I'm curious if you've thought at all about this idea of a U.S. strategic Bitcoin reserve or nation-state adoption and how their custody setups might look, because I was thinking just the other day about this idea of multi-jurisdictional. You don't want, if you're the U.S., perhaps, you don't want all of the key holders located in the U.S. so that an invading entity could just kind of lock off the borders and dig around and find those keys. So maybe it would make sense for 1 or 2 allies to be a key holder of your quorum, holding those keys in their jurisdiction. So I'm just curious if this does come to light and you had the president or the treasurer's ear, how you would maybe recommend a couple tips as to how to secure that strategic Bitcoin reserve.
This is a fun question, and I don't have the perfect answer, because this is really the most complex, the most critical type of Bitcoin custody scenario you can imagine, right? So I love that you're asking it, because you think about too a transition of power and all that goes into a transition of power, the transition of the nuclear codes and kind of making sure that the outgoing U.S. president no longer has access to key infrastructure or key weapons systems in the same way that you wouldn't want them to have unilateral control over the Federal Reserve or the Treasury. So the same with Bitcoin. I don't. So like for the U.S. specifically, I don't think they would want to have. So I certainly think multi-institution makes the most sense. Maybe they would hold one key out of that quorum, and then that key would be sharded amongst multiple members of the executive and judicial and legislative branches. Um, I yeah, I don't think you'd want a key outside of the U.S. Now the U.S. is large enough, and you also have obviously a republic, so you have separate states which used to have their own rights. If you have a smaller country or one that does not have the same level of defense capabilities that the U.S. has, and you're more prone or more vulnerable to invasion and essentially a looting of your treasury in the same way that countries have been looted for their gold, that might change the calculus. Where if you could have a key in Switzerland or you could have a key in the UAE, that might be very attractive. But I think you want to trust your country with the keys as much as possible, and then certainly making sure that there's no, you're not making the holders, whether it's a president or the leader of that country, you're not making them a target or vulnerable. That they only have so much access. They only have, probably what is one part of one key, and there are many parts of that key that need to come together for even that one key to sign, and then there are 3 or 5 keys in total. So what you have practically is, maybe it's 50 or 100 people that are collectively managing these keys, a very large quorum. The Bitcoin rarely ever moves, and if it does, this is quite a monumental key ceremony. It probably has to be to that level of extreme redundancy and dispersion of control.
Yeah, maybe I've seen too many spy movies or something like that, but I kind of imagine a U.S. Citizen, representative of the government, but maybe unnamed and not working in a public position, but just is paid to go live in Switzerland and be a key holder, or somebody who is paid to go live in France and just kind of live undercover but is a key holder. I could see something like that where that individual almost becomes like a Secret Service level of commitment that gets passed on from individual to individual.
That's interesting. I don't know if you could pay someone enough to do that job, because then they have the biggest target on their back in the world, where they're constantly in fear for their life. And in this context too, like I think it really comes down. There's no way that it would just be one key. Like let's say it's a 2 of 3 multi-sig that the U.S. Department of Treasury Department sets up. Each of those keys would be sharded into many pieces. So one key maybe would have its own 3 of 5, 4 of 7, 7 of 12 quorum, whatever that might be, and then each of those shards would be held by different individuals, secured in different vaults. This is just institutional key grade management generally. So even if you had someone in that type of anonymous scenario, they would only hold one portion of one key in a larger quorum. So it's, in your mind's eye, it's kind of this incredibly decentralized map of key material that is all held offline. But it does raise some really interesting security implications, because that's a heavy responsibility. And as the Bitcoin becomes more valuable, then the frequency of the attacks and the sophistication of the attacks increase, right? Like you have North Korea already at a state level is working on a remote basis to steal Bitcoin and crypto from people all over the world. It's very profitable for them, especially with their limited options for revenue. They stole over $1 billion in 2023 alone. We'll see how much they stole in 2024. So, and then you can imagine those attacks going from the digital world, from behind computers, to out into the physical world, and trying to track down individuals who are responsible for maintaining the keys going into vaults. But that's when you need firms like ours. You need firms to continue to increase and think through and upgrade the level of sophistication, security, and always be ahead of that as the value of the asset increases, and as the type of holder also increases in scale and kind of prominence.
That's a great question, Chase. I haven't thought about that, but I guess as long as it's not a single point of failure, as long as the president isn't holding a cold card or a ledger, we'll have to make sure we get something better than that for them. Cam, I want to end it off on one final question. I think the 100K mark has been something that people who have been in Bitcoin for a long time have looked forward to for a long time. And it's almost as if now that we're at 100K, it's how high can Bitcoin go instead of when will it go to zero? So if you could just end it off, tell people why it's important for individuals and businesses to know that we're still early to Bitcoin and that the risk is not having any rather than losing it. So just your general thoughts there.
Everybody who's ever considered Bitcoin has felt like they were late. So I've talked to individuals who bought Bitcoin in 2013 or 2012, and they don't consider themselves even early adopters. They knew people who then mined in 2009 or 2011. They felt late when they started acquiring Bitcoin. So that is true at every level, as counterintuitive as and unbelievable as that may seem. There are ways with Bitcoin which is unique where you can take a look at objective data about Bitcoin and its adoption and figure out for yourself where we are in Bitcoin's adoption. There are only roughly 4 million unique Bitcoin addresses with greater than 0.1 Bitcoin. So now an individual could have more than one address. You have individuals that have Bitcoin at Coinbase where those funds are commingled and using a few addresses to secure Bitcoin for multiple clients. But as a rough proxy, you could say that there are about 4 million people in the world that have at least $10,000 worth of Bitcoin because they've taken some form of custody for themselves. So 4 million people versus 8 billion and even $10,000 in the grand scheme of an investor's net worth, probably not that much. So we are incredibly early, and I think viewing it as better money, as a better savings technology, as a long-term investment that you manage very conservatively for many years and try to part with as little or none as possible, that can benefit everybody, whether it's a corporate treasury, it's an individual, and it's open to everybody. You can buy as little as $1. You can buy, of course, fractions of a Bitcoin, and it can benefit everybody's life.
Well, thanks, Cam, for coming on. Thanks to Jackson, too. He had to drop, but appreciate you both coming on, and also just really appreciate the relationship that Acropolis has with Onramp. We believe that custody is the most important piece of Bitcoin. If you lose the Bitcoin, then nothing we said matters. So appreciate everything y'all do for our clients, coming on and talking a bit more about the product. Would love to have you back on anytime.
Thanks so much, Mason and Chase. Yeah, likewise. You guys are on the forefront as well, educating, helping corporate treasuries to understand where Bitcoin and why Bitcoin has a place for them and how it can really materially impact their business and all their stakeholders and their own customers and clients. So we're honored to be able to play a part of that in the infrastructure side. So really appreciate you all as well. And thanks for the time.
Also, and if folks want to follow you on socials, it's 21 Bullish for you, and I think it's Macro Jack 21 for Jackson, right?
That's right. And we're also on LinkedIn very actively. So please feel to reach out, DM me in either platform. Otherwise, my email as well is cam@onrampbitcoin.com.
Yeah, and maybe one last thought for the listeners that I've heard from the Onramp podcast and Onramp Media's list of different podcasts and podcast hosts, which is amazing. So our listeners should definitely be aware and go check out all of those great podcasts and educational resources. But maybe just a final thought that I've heard that really resonated with me from all of that content is that the risk of Bitcoin going to zero is kind of behind us now. And the real risk is your position in Bitcoin going to zero. And so I hope people really start to think seriously. Once you've gotten past thinking seriously about the asset class and why it makes sense in a portfolio, your time should be spent thinking about how to protect and secure that asset. And Onramp is really best in class there. So thank you again, Cam, for your time today.
Well said. Thank you, Chase. Thank you, Mason. Take care, guys.
Cheers. Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.